So when I ask you, what are the reasons for a currency to go stronger, or what is the reason for a currency to go weaker? This is one of the things that most people really do not care to understand. And this is what is really stunting your growth and your performance in the Forex markets, is because you're not choosing to learn what is driving a currency higher and what is driving a currency weaker, right? Because if I say that, oh, fundamentals is the key driver for these events, you have to understand central banks because they're the people that controls the value of a currency. So does it make sense if you understand that the dollar increases and decreases in value, and then you know that there's a reason why for it to happen, don't you think that is giving you an edge to be able to trade that pair better, more profitably? Because now you understand, well, there's going to be reasons for that to happen, that it can increase in value and decrease in value. Understanding this makes trading a lot less guessing, right? Because if you don't understand what is driving the currency, it is no different than like going to a casino and just playing a slot machine and just hitting the button over and over and over again. You're just hoping to win. That's the same thing if you're just not focusing on fundamentals, right? Because the central banks, they control the value of the currency. In order for them to make a decision if they want to increase rates or lower rates, because interest rates is what determines if the value of the currency goes up or down. Economic data is what they pay attention to in order to make those decisions. So when somebody tells you that fundamentals is not important, that technicals is what drives the markets. So it's like somebody telling you when Russia and Ukraine happened and for gold to go higher, they're literally telling you that the reason why gold goes high is not because it's a safe haven, it's because of a break of structure, because of moving average, because of a fib. So the reason that war started is because gold prices reject this candle supported a war in gold, a war in Ukraine or Russia, whatever. When somebody talks to you that way, you will you would literally look at them like they're fucking crazy. And we all know that, right? So why in this industry people, it's obviously because it's easier to just tell somebody that don't want to learn something and they don't understand something. It is easy to tell somebody that it is manipulated. This is manipulating price. It's easier to tell you that because they don't want to learn it. Most people don't need to learn it because most people are already really trading, right? Because you and I, like, we're family here. We know that we've been trading the same way every single day, just like the rest of them. How can they consistently be profitable not understanding this information? Because if that's true, we all be killing it. We all wouldn't be caring about central banks, right? But how come when we look at institutions and banks, they don't talk about price action, they don't talk about candles, they talk about events. They talk about what is leading to these opportunities. When gold happened because of geopolitical tensions. So that's telling you the movement is because of a reason, right? So this is what really hurts a lot of traders, is not understanding this. Some traders are very great at technicals, but that missing piece is what would probably take you to that next level, right? And that's something that I had to learn throughout this journey. This is what transformed my trading, and this is why I'm trying to help people understand. And it's not to say that technicals is not important. It's false. It's extremely, but that's how we look to enter trades. But you need confirms and reasons behind you enter those trades. And that's what's going to help you build consistency. Because now a person could say, I'm struggling with waiting for the right opportunities. So if you know that today inflation, this week we have inflation data coming out on Thursday, you want to trade the dollar in US equities. Now you know that an opportunity is going to be on Thursday. So that forces you to be patient. The only thing you got to do is just wait for those opportunities to come, right? We all know that, okay, war tensions is going on. This could probably set up for some good opportunities for gold. When those headlines come out, that's an opportunity to take advantage of it. But also there's understanding of knowing what those headlines impact, right? Because it's a learning curve. And learning all of this, don't force the process, right? Because most people expect to learn everything within a week. We're pretty darn lucky that ever since ever since 2020, we had every shift in monetary policy happened in like over 2 years, right? We had quantitative easing, quantitative tightening, we had stimulus, right? We saw interest rates go from high to all the way to 0%, all the way back up. We see inflation rising all the way high. All of this is information that helps us trade. All of this impact every single central bank, every single currency. So it doesn't, every central bank follow the same steps of monetary policy. So once we could understand how the markets react to this data, now we have all of this information that literally takes decades. We learned all of this in probably like 3-4 years, probably like 2 to 3 years. That's the benefit for all of us of understanding fundamentals, because now we know how the markets react. If we have another 2008, a financial crisis, right? What you think is going to happen to US equity markets? Would you buy or sell, right? If we go through another geopolitical tension, what do you think is going to happen to gold? Would you buy or sell? These are the things that help us take advantage of these opportunities, is by learning this information, right? This is what helps us gain an edge. If you choose to stay away from it, this is why you find yourself in this rabbit wheel, constantly winning and losing, winning and losing, winning and losing, because you're not focusing on the opportunities that helps you win consistently, right? So when you're just focusing on technicals only, nothing wrong with that, but it's 50-50, because there could be a chance that you see that same technical setup. It may win today, and then it may lose tomorrow. But when you have an economic event like in higher inflation that comes out, that strengthens the currency. The next month that happens, you get a higher inflation print, it strengthens the currency. Technicals, we could debate all day. But when it comes to fundamentals, there's really no debate. If they start dropping interest rates, we know that's going to weaken the value of the currency. So these are the stuff that can help you remain consistent in the markets. And this is what separates a lot of traders in the long run. This is what's going to help you stay in the game. But also, I want to drill this into you guys, is risk management. Because it doesn't matter what you learn. It doesn't matter what strategy you learn. It doesn't matter who you learn from. It don't matter how many times you go over it. If you're over leveraging, it's going to destroy you no matter what. Because you cannot control the volume of the movements of the candles. You could be extremely right with the direction, but those pullbacks can take you out of the trade and blow your account. You cannot be over leveraging. Focus on risk management first. Focus on understanding how to use risk. Risking 2 to 3% per trade, and then just learning to be right. This is what's going to really separate you for the long run, because you cannot think about winning short term. You have to really have to think about winning long term. This is a long term game, and risk management is what's going to help you stay in the game long term. All right, guys. Hopefully this is helpful. If you guys have any questions, just message me below.